Hello and welcome to the October 2022 Francis Financial Investment Insights. My name is Peter Willem and I'm a Senior Associate Advisor with Francis Financial. And I'm here to give a quick recap over what happened over the last month and some of our thoughts going forward with how the market's doing and how that fits into you and your portfolios. So without further ado, I'll jump right in. So we have a nice collection of 4 charts that we're going to go over today. And this first one shows what the returns are for various asset classes over the last month. So that's that darker teal, that MTD, and over the last year. So that's that lighter teal, that YTD, and over the last 3 years, year over year. And you can see that over the last month, a diversified portfolio, which is a mixture of both stocks and bonds, is down, and it's down about 7 to 8%. And you'll see below that US bonds make up for about a 4% loss, and the US large company stocks and stocks in general are down at about 9% over the last month. And what we saw was really a tale of 2 halves of the month. The first half of the month was actually pretty positive for the stock market. We saw very strong returns, and this was getting as high as reaching May 2022 levels. So we did start to see a rebound there with a lack of bad news. And then unfortunately, once we got around to mid-September, we did see the inflation numbers get posted, which were above where we projected them to be. And with those higher inflation numbers, projected higher interest rates from the Federal Reserve, saw a investor pullback across the board on both the US bonds as well as the stock side. And we'll get into more on those inflationary numbers, but to give a recap, this is not something that we haven't seen before. And if we look at investment returns across each month over time, and this is going all the way back to 1928, on average, most of the months are well above at least 0.5%, with 4 months even on average returning over 1% per month in January, April, July, and December. And you can see September is a really strong outlier. I'm at negative 1.1%. So this is something that we've seen, and it's a lot of having gaps in information. In September, it's a little after we see the second quarter earnings information and a little before we get the third quarter earnings information. So we see investors jump the gun and say, you know what, maybe it'll be worse than we actually think it is. And oftentimes we see on an average basis, those returns start to get made back up. So in October, positive month, November, a positive month, as well as December. So just looking forward, that is something to project. But as far as why the stock market was down this time around, it's because inflation numbers came above forecast. So if we look at the CPI, which is the overall inflationary numbers, it did actually decrease from July to August. However, that 8.3 was above that forecast of 8.1%. And on a core CPI level, so those are figures outside of food and energy, we did see it increase from 5.9 to 6.3. And why this is important is because that signals more Federal Reserve tightening. And when we say more Federal Reserve tightening, that means higher interest rates. And when we have higher interest rates, it just means that borrowing becomes a little bit more expensive. And what were the old loans are no longer the best loans around. But while that does hurt in the moment, there are benefits to having those higher interest rates. If we look at the bond side, bonds are as lucrative as they've been in a very long time. Even if we're seeing a momentary downturn in price, interest rates are coupon rates. Interest rates are the income that you get from your bonds. So if interest rates are higher, the income that these bonds are giving you are actually higher. So we'll project going forward more price stability as well as more income coming from your bonds. So there is an intermediate case for continuing to have that diversified portfolio of stocks and bonds and actually positive outlook. And on the stock side, one of the benefits of having downturns is opportunity. If we see how markets tend to react after declines, so far this year, we have seen that return of about 20%. And over the next 1 year, 3 year, and 5 year cumulative averages, you can see that 22% over 1 year, over 40% over a 3 year average, and 71% on a cumulative basis. So this is really strong numbers that show that patience is key. that stocks are selling at a discount right now, specifically relative to where they were before, that even though we're experiencing significant volatility in the short term, there's a lot of opportunity on both the bond and stock side that investors should be excited for going forward. That said, there will likely be more volatility ahead as we experience some numbers coming up, but there's a lot of positivity to look at as far as what it means right now and the opportunity to use your cash and put it to work going forward. It is a really, really strong time. And so then if we look at the takeaway, some of these important points to watch are those earnings seasons. So it kicks off with Pepsi on the 12th. And the question is, how are these earnings going to do? We had very negative, pessimistic earnings projections that have actually, we've seen over the second quarter, eclipse those numbers. So it might not necessarily be quote unquote as bad as we think. And the forecast for growth is at around 3%. And then if we look at something that Alan Binder mentioned in a recent Wall Street Journal article, it's that history teaches us that successful engineering, a soft landing, requires both skillful decisions and a dollop of good luck, but the odds are far from prohibitive. So not getting too caught up in this doom and gloom, not saying that this is an irredeemable situation. In fact, it very much is, and that the long-term successful numbers of even after these downturns are very, very strong and very, very positive. So maintaining that diversified portfolio, making sure that you continue time in the market, not timing the market, and riding the ups and downs to be able to enjoy those ups. And so that's all we have for you today. But as always, if you have any questions or any thoughts or concerns, please feel free to reach out to me or anyone at the Francis Financial team. And a very heartfelt thank you for joining me on this conversation today. Thank you and have a wonderful rest of your day.